Broadcasting for the Sports Channel.
Alrighty, welcome back to Weenie Trades. Today on this quick Saturday, hopefully you guys are having a great holiday and resting up nicely. But today we're going to be talking about equilibriums and how to spot equilibriums and how to trade off of them. Equilibriums are valid on all time frames. In fact, the higher the time frame, as you'll see, the more powerful the equilibrium will be. How you can get really good risk to reward setups by spotting equilibriums, and how most equilibriums tend to form triangle patterns. You know how we trade triangle patterns, and you'll see in this video how we trade triangle patterns, and how a stock price is really important as to how it gets there and where it is on the chart. And through equilibriums, you can do dip trades or breakout trades. You can do short setups, all alike. Our first example that we're going to give on equilibriums is on ROKU, the 1 minute chart. This was just Friday, and ROKU was pressing up to all-time highs. If we notice, ROKU's been a beast on the daily chart, just going up and up and up. So there's tons of trades to be happening, but we're going to talk mostly about equilibriums. But ROKU on Friday had a nice no gap, quick spike of the highs. So right here, ROKU popped up, and look, you had a nice little short setup right underneath 360. You could short that and, you know, put your stop above 363, and boom, you can ride ROKU down to 355. But that's not as important. See, this sell-off right here is pretty extended. Look, from 363 all the way down to 355. That's minus 2.3% in just, I don't know, 4 minutes. These are 1 minute candles. This is a 1 minute chart. So since we're super oversold, you know, I bet the RSI was extremely low at that point. When you're super oversold, you can take a dip trade if you want. So what you can do is you can buy right over here, just over, 356, 357, and you can put your stop just beneath 355. Boom, if you get 100 shares, that's $200 of risk. Maybe you do 50 shares, but let's say you're going to do 100 shares. Boom, that's about $200 of risk. And right here, you put your stop beneath the lows, and you get this nice good push up. But you don't expect, if you're taking this dip trade right here at 356, you don't expect ROKU to break the highs of 363. So what we want to do is we're expecting a lower high. And this usually comes from retracements. So to check out retracements, I don't draw retracements too much as I'm trading, but that's mostly because I have them in my head. But let's say this is the low, which it was the low, 355. And then you go to high, you measure the high, and look, you get your retracements. And look, if you take this dip trade right here, say you enter right about here on ROKU, stop just beneath the low, you can target something about the 50% retracement. And look, ROKU did a nice good push up, and look right where it tags, right at the 38.2. So it retraced almost to the highs. So you expect a lower high because of the waterfall sell-off. Think about it. There's a lot of people that are trapped maybe on their longs up here that are just looking to get out where they should have gotten out, the former breakdown area. So let's clear the equilibriums or the retracements. And so look, we have our high, we have our low, and look, we have our lower high right here, right at about the former breakdown area. And that's where you can take your profits. So if you're in at 357, stop beneath 355, and boom, you can take your profits right about 360. That makes sense. It's a psychological area. But then look, ROKU, since we, since it was such a good bounce, that's what the reason it was such a good bounce, you can measure from low to high. And look, we get this nice good area value, and we place a higher low, and we put in a nice higher high. If we redraw our old Fibonacci retracements, look where this high topped out, right at about 361.50, right about this upper retracement. So that's kind of equilibriums and how they work out. And so you could also, there's tons of trades to be had on ROKU. ROKU's a really good trading stock, but look, you can also draw in a trend line. You can start at the low, and you can connect it to the higher low pivot. And look, you bounce right off the trend and then made a higher high. However, the higher high didn't get much follow through. Look, it started to reclaim this former resistance area and broke down. And look, it broke down, it back tested it, and look, it started to break down yet again. And then look, you could short ROKU right here at about 360 with a stop just above 361, $1 of risk. And then boom, you get a move all the way down to 357.36, this former support area. So that's kind of how equilibriums work. You mark your lows, you mark your highs, and then you wait to see which way it breaks. So if we draw out our supports and resistance, there's your support, there's your resistance, there's your lower high, here's your higher low, here's another lower high. That's creating the equilibrium, higher low, lower high yet again, and we're just starting to form this triangle pattern that eventually broke bearish just because ROKU is a little bit extended. So that's an example of equilibriums on the fast time frame. Here's your triangle pattern. We're pinching. You get towards the apex, and look, you could short ROKU right here with a stop just beneath, the upper part of consolidation. You can do a tight stop right here above 359. You can do a medium stop above 359.50. I would go with a stop above 360, or you could go a stop above 360.60. So there's tons of ways to go about it, and equilibriums will help you structure your trade. Our next example will be on Microsoft, and this will be on the weekly time frame. So each candle represents a full week of price action. And look, I love it when stocks go sideways because it means they're gearing up probably in some sort of equilibrium and to pop higher. So look, Microsoft made this nice good high of 232.86, and look, we sold off from it. That lets you know that that's the resistance. And look, nice good oversold a trade right here. And then look, we got this nice good igniting green bar. You can go long on Microsoft just over 208 right about here. But look, mark your low. And look, right here, we expect a lower high because of the size of the sell-off. So you mark your lower high, and look, Microsoft sold off from there. But because the bounce was so good, this was a nice good rally off the lows, you expect a higher low. So think, if there's a big rally, expect a higher low at some point. That was a nice good 15% rally. And where the higher low come in, just above the prior pivot low. So that means we're starting to form an equilibrium. We made a slight higher high, so it could be a little bit of a trend change, but quickly sold off, probably due to market conditions. Then Microsoft went ahead and put in a higher low, and now we're looking to go long on Microsoft. If Microsoft can break this, 230 level, you could probably get early confirmation over 226. And look, you can just draw your triangle pattern because that's created from the equilibrium. Massive sell-off, massive rip. Another sell-off, another rip. So we got this nice good triangle pattern. We're making higher lows at the same time we're making lower highs. Buyers are buying the lows and stepping up. Sellers are stepping in at lower highs each time. One way is going to give out. And I'm probably going to favor the upside for Microsoft. So we'll see if Microsoft can break up. If not, Microsoft might break down underneath, 210, 208 area. And so triangle patterns give you those good entries and then your targets, and you can risk off of the triangle patterns and equilibriums are more favorable the closer you get to the apex, because then you can have a tighter stop loss. If Microsoft tightens up and keeps making lower highs, higher low, lower high, higher low, lower high, then you can get a nice tighter risk reward setup, and you can buy the breakout with an even tighter stop, maybe underneath 220, and you can buy over like 225. So that's a lot tighter than if you were to buy at 230 with a stop beneath 210. So equilibriums definitely help you get those good risk to reward setups. Our next example of equilibriums is going to be on Apple, and this is the hourly time frame. So each candle represents a whole hour of price action in the market. But Apple got some really good news, positive news catalysts from announcing the iCar. So Apple, look here, we made a high, and then we may have had an extreme sell-off. There's your low. Mark that low. Then look, because we're so oversold, if you're going to buy that low, you need to understand that you're not going to get a break of the highs right away. So what do? We made a lower high. Just curious, I want to see what the Fibonacci extension is. Here's your low, here's your high. And look, we kind of petered out right about the 32, right about the 50% retracement level. And so Apple, you can trade off those equilibriums as long as you understand where it is most likely to go. Sure, sometimes they can just break the highs right after making a low and just go straight up. That's less likely to happen because of that earlier sell-off, and the people that were trapped that should have stopped out, at 133, they're going to be stopping out later as it comes back to 133 from the bottom side. So if we mark our equilibriums, Apple is getting into a tightening range. So we have our high, our low, we have our lower high. Then look, we set a higher low right here at the open the other day, and we put in another lower high right here. We've slightly made a higher high, but Apple getting into this nice tightening range, and I'm bullish Apple, so I expect it to break upside, but that doesn't mean it will break upside. I'm just expecting it to. But Apple can break downside, if it comes underneath 130, 134, or it'll probably break upside if it goes above 132.68. So you can buy those, and then you can put your stop beneath, 130, 145. You can buy over 132.70, and boy, you can enjoy the Apple ride all the way up. If we look at Apple on the weekly time frame, we had this equilibrium going, and it's starting to break bullish. This is what it looks like when it starts to break bullish, which is why we're long Apple with just a little bit of a feeler position. But we have our high. That lets you know it's a high because it sold off so heavily. Boom, we have our low because of the nice good igniting green. We have our lower high because our lower high was, we don't expect it to break the highs. We expect it to pull back and retrace a certain amount. We put in our higher low. Then we put in another lower high, so we're getting into a nice tightening channel. Here's our tightening triangle pattern. And look, right here, this day, this week, Apple broke bullish right about there. And there you go. You can take a long entry right there. You can put your stop beneath, 112, 111. And there you go. You're nice and in the money and would probably still be in the trade. So that's another example of equilibriums from the hourly time frame and from the breakout of the weekly time frame. Palantir is another example of a stock going through equilibrium. This is on the daily time frame. So each candle represents a whole day of price action. So this is Palantir, PLTR. We made our high, we made our low. And look, we rallied right up to the gap. Here's the gap. See how it was resistance? We rallied up to it, pulled back a little bit, and then we broke through. And look, we set our lower high right about, the breakdown candle area. So perfectly right where it should have. Boom, we come in to test support, which was, the former gap. That was support. You got to bounce. But then we put in a lower high. Double bottom right here at 25.20. And we broke bullishly. And now we're looking for a higher low compared to, compared to 25.73. So Palantir, I'm bullish on Palantir because we have this nice, good triangle pattern. We're making higher lows and lower highs. And we're expecting Palantir to break bullish. And the reason I'm expecting it to break bullish is whatever the trend was before the equilibrium, that's generally where the trend resumes. So we'll get into our next example going to the downside. Our last example on equilibriums will be on Nikola, NKLA, and NKLA had an equilibrium that broke to the downside. So NKLA had this nice good top right here at 94, then a massive sell-off. So because of the massive sell-off, we expect a lower high. So here's our higher low right here at $52 a share. Then we bounce up, we come up to, $75 a share. That's your lower high. Higher low, double top, higher low still, but then where did the higher lows start breaking down? Right underneath 63. That's your short setup. You can short Nikola, make money on the way down as it breaks the $63 a share support right here. You can put your stop, tight stop, above 69. I'd go with the stop above, $70 a share. And then boom, Nikola came all the way down to support because it was so extended. Boom, you expect a lower high if you're going to take that dip trade right here, and you can buy Nikola over 48, put your stop beneath 40, and then boom, you get a move all the way up to $60 a share. So that's kind of an example of equilibriums breaking to the downside. When we see wide range candles, that's where I love to trade because you can take a dip setup, you can take a short setup, you can take any kind of setup, and then you can add if it breaks out, or you can, if you're willing to sit through the higher lows and lower highs throughout that entire sequence. So equilibrium, super important. Hopefully you learned on how to get good risk to reward setups. It's valid on all time frames. In fact, the higher the time frame, the more powerful the equilibrium will be. And hopefully you learned how you can do dip trades or breakout trades based on finding those equilibriums. Be sure to draw your retracements, and you can figure out where a stock might bounce and where it might find resistance based on those retracements. Alrighty, thanks for tuning in. See ya.